He's one of the most followed names on the street, and now Bob Dahl is out with his predictions for 2011. He's the chief equity strategist at BlackRock, where he helps manage $3.5 trillion with a T dollars in assets. He joins us now live. Bob, you've just been unveiling these predictions. You're looking at with 1350 on the S&P for the end of the year. Believe it or not, that's actually pretty conservative given the almost universal optimism out there.
Yes, we're actually using 1350 plus, and the plus is to say if we're wrong, the risk we think is more to the upside. We used 1250 coming into the year that just ended, and we had 1250, and if we were wrong, we thought it was too aggressive. So the risks are more to the upside than the downside.
So when you're looking at that climb of the year that we just began, do you see us taking a breather in the first half or the second half before we get there?
Oh, getting a year right is hard enough. Where the breathers come, I think there'll be several during the year. I think that there are still credit issues we have to deal with. The government in Washington, D.C. has looked a little more market-friendly of late. We'll question that from time to time. I'm sure that we'll have our selling squalls during the course of the year, but we think there'll be buying opportunities on those backups for whatever reasons.
Yeah, I said it's hard to find a bear out there. We found a relative one. I mean, Morgan Stanley's equity strategist saying that while they do see upside towards the end of the year, they do really see the higher cost of doing business hurting companies with commodities climbing, with currency fluctuations, and multiples will come in a bit.
Yeah, I would argue that earnings growth will be reasonable this year because we're going to have stronger GDP growth. And that will come a healthier mix. It's going to be less about inventory restocking, less about government stimulus, and more about, believe it or not, good old-fashioned real final demand. That's healthier growth. It's more sustainable growth. And if we get surprises, they'll be on the PE side, I think, to the upside if confidence continues to improve from still pretty low levels.
Yeah, in the commodity space, you are looking at oil perhaps topping $100 per barrel, also seeing some other commodity climb there. You don't see that as capping growth and then hurting costs for corporations, or is it just something that you think companies are pricing in at this point?
Well, we think the S&P 500 generally benefits in its earnings from rising oil prices, largely through the energy sector. So we think earnings will actually be better if oil prices go up. Yeah, there'll be some residual consumer staple margin problems if commodities move higher, for an example. But by and large, commodity prices, if they're moving up gradually, is not all bad news.